Guys, keep watching KS tutorials, they are the best.
Hello guys, my name is Kennedy and I welcome you back to KS Tutorials. KS Tutorials, keep calm and then balance on. Keep calm and then balance on. On today's episode, we'll be playing a game. We'll be playing a game and the game is the accounting game. It is the accounting game. What is the accounting game? What is the accounting game? The accounting game, or it is a game. The accounting game is a game that helps learners. It helps learners understand the debit and then the credit principle. The debit and then the credit principle. So what we are saying is the accounting game is all about debit and then the credit. Debit and then the credit. On today's episode, I bet you are going to appreciate debit and then the credit. You are going to understand when to debit and then when to credit. That is why we are going to play this game. This game is actually going to help you understand the debit and then the credit. The accounting game we are talking about is more like a set of rules or guidelines that is going to help you know which account to debit and then which account to credit. When they say you have a transaction, which account are you going to debit and then which account are you going to credit? So that is more like what the accounting game is all about. It is a debit and credit rules, when to debit and when to credit. Okay, so one thing that we are supposed to know, that every transaction has two accounts. Every transaction has two accounts, and then always one account is debited and then the other account is credited. Whatever the transaction is, one account is supposed to be debited and then the other account is supposed to be credited. Do we get it? Let's say we have always, I like this example, both goods was worth 20,000 or 5,000, 2,000. Let's say you bought the goods. It is a transaction. You bought the goods with cash and then you bought it. So purchases and then the cash. So meaning one account is going to be debited and then one account is going to be credited. That is what we are talking about, and that is what we term as the accounting game. The accounting game. Okay, so what is debit and then what is credit? What is debit and then what is credit? So debit represents an increase in assets and then revenue. This debit represents an increase in assets and then revenue. Also a decrease in liabilities and revenue. A decrease in liabilities and revenue. So this debit actually means that when an asset increases, it is debit. When expenses increases, it is a debit. But when liability and revenue decreases, it is debit. So the debit is actually the increase in assets and expenses, and also a decrease in liability and revenue. That is debit. Okay, so the credit is the direct opposite. So the credit is where liability and revenue increases whilst assets and expenses decreases. So you see, it is the direct opposite of the debit. Do we get it? Okay, so let's say we have, so this is the T account. When we are talking about debit, the debit is at the left side of the T account. That is the debit. And then the credit is the right side of the T account. Do we get it? Debit is left and then credit is right. So whenever you see anything written at the left side, anything written at the right side of an account, it is credit. Whenever you see anything written at the debit side of an account, it is debit. Hope this one is clear and it makes sense. Okay, so let's talk about the rules of the game. Let's talk about the rules of the game. So first, for the personal account, we are saying that debit the receiver and then the credit the giver. Debit the receiver and then credit the giver. So in our books, let's say we received loan from Amma. We received loan from Amma. Who is Amma? So what are we going to do to Amma's personal account? Because we are going to debit our cash. and then we'll credit Ama. Who is Ama? Ama is a giver. He is giving to the company. So we are going to debit Ama's account. That's why we say credit the giver. Ama is giving to the company. So we credit Ama's account. Okay. So let's say we gave loan to Emmanuel, who is receiving. Emmanuel is receiving and we are giving. So meaning we are going to credit our account and then we will debit Emmanuel's account because Emmanuel is receiving. Do we get it? So for personal accounts, whenever an individual, let's say Ames account, Emmanuel's account, Prince's account, Joshua's account, whenever we see individual names or account debtors and then the creditors, whenever we see them, account payables and then account receivables. That is a new name for them. Account payables and then account receivables. Whenever we see an account payable or account receivable, or let's say a company, an entity's name there. Let's say we took loan from ABC Company Limited. Whenever we see such this one, it is a personal account. And then the debit and the credit do say that we are supposed to debit the receiver and then we credit the giver. Do we get it? Okay. So now to the impersonal account. For the impersonal account, we are talking about we use the increase and then the decrease to know whether we are debiting or crediting. So for the impersonal account, it says whenever an asset increases, that's the plus, increases, whenever an asset increases, we are supposed to debit it. Whenever an asset decreases, that's a minus, we are supposed to credit it. Whenever liability decreases, minus, we debit it. Whenever liability increases, we credit it. Whenever an expense increases, plus, we debit it. Whenever an expense decreases, minus, we credit it. Whenever revenue decreases, minus, we debit it. Whenever revenue increases, plus, we credit it. Do we get it? So more like what we said earlier. As debit means increase in assets and expenses, decrease in revenue and liabilities. The same thing here for the impersonal account. For the impersonal account. Do we get it? Okay, so I have an example here that we are going to try our hands on. An example that we are going to try our hands on. Okay, so let's say it says paid rent Ghana cedi 5,000 in cash. Paid rent Ghana cedi 5,000 in cash. What does it do? So we have rent account and then cash account. Rent account and then cash account. We have rent payable account and then cash account. Okay, so we paid rent. Rent is what? An expense. Cash is an asset. Rent is an expense. Cash is an asset. What do we do to our rent? Our rent has increased. Our rent expense has increased. So meaning we are going to debit it. And then we paid with cash. So what? Our cash has decreased. Our cash has decreased. Do we get it? Our cash has decreased. Okay, and then the next question is sold goods worth 2,000 Ghana cedis on credit to Ama. Ama is a personal account, and since we sold goods to Ama and Ama is owing us, it becomes a debtor. Ama is our debtor or account receivable. Account receivable. Ama's account is an account receivable. Okay, so since we sold the goods to Ama, we gave Ama the goods. Ama is here to pay us. We give the goods to Ama. Ama is receiving the goods, meaning we have to debit Ama's account. We have to debit Ama's account. Going by the previous debit the receiver, credit the giver. We have to debit Ama's account. And then it says sales. We say sales, whenever sales increases, we credit it. Whenever sales or revenue increases, we credit it. So we have to credit our revenue. So you see the accounting game is very simple. With the rules of the game, any transaction that you are given, any transaction, you should be able to solve it or to be able to do it. Thank you for being with us. Thank you for listening to KS Tutorials. KS Tutorials, keep calm. KS Tutorials, balance on. See you.